All right, ladies, gentlemen, business owners, we're back. We got the whole team here. It's our second time with the whole team here at Ledgerly. We got Andrew, Chris, on Mike. Again, we're gonna keep it just super casual today. We just talk about a couple topics on bookkeeping, accounting, tax, just important little topics for business owners out there, just to keep in their back pocket as they're going through the regular business operation. So it's going to be an open discussion. We got a couple topics that we want to talk about. So let's get into the first one. We got, what is a write-off? A lot of people throw this word write-off around, like crazy. Like there's that meme from Schitt's Creek talking about, oh, it's a write-off. It's a write-off. It's a write-off. What does it actually mean? So, Andrew, you want to kick us off here with a little bit of words of wisdom on what is a write-off?
Yeah, well, I think we see it with, I feel like it's a problem for a lot of self-employed people who have their own business, who, set up the bank account, then they got this flashy credit card, and, they just start buying gas, their groceries, if they work from home, treating themselves to lunch dinners every night. Like that's not all a write-off. Like you set up the business account for business expenses. So, if you're driving to a client site and you need to pay for gas, like, okay, like, yeah, that's a write-off. But if you're driving to the same place of business every single day, like, that's kind of where there's a little bit of gray area, because it's like if it's past your principal place of business where you're meeting clients or going to a job site or whatever it is, those sort of expenses related to your car are a write-off. And there's just a lot of gray area that I think a lot of business owners don't really think or know about.
Yeah, definitely. I mean, another big area is the whole concept of meals and entertainment. And, back during COVID, meals and entertainment were 100% deductible. And that was an
Yeah.
incentive to give business owners, encouraging them to eat out and support their local small businesses. Now we're back into, the same old school story of now they're back to 50% deductible. So, you're going to these great steakhouses, you're going to these Michelin star restaurants, taking clients out. That's fine. But now you got to realize that that $500 bill is not 100% deductible anymore. Now it's only 250 of it is deductible. That's definitely one thing to keep in mind. Also, another thing that I've encountered from clients doing their bookkeeping is a lot of people are putting their loan payments or their credit card payments as write-offs, as an expense, and that's not right. So they're putting these $2,000, $3,000, $4,000 payments against their credit card, which really should be going down as a liability, a payment against their liability. So they got these expenses, quote unquote, on the profit and loss, and then we go in at Ledgerly, we go in to clean it up, and we're like, well, your profit just got jacked up by another $50,000. So what you thought was a write-off just created more profit. They probably underpaid on their quarterly taxes. It's just a whole domino effect. So that's one thing to keep in mind for sure. For you business owners, is that credit card and loan payments are not expenses. They're not write-offs. Those just go against the existing liability. Also, Chris, is that cigar you're smoking? Just give us a head nod. The cigar, is that a write-off today? Yeah, baby, because we're doing business today. Go for it, Andrew. What'd you say?
Gotta love it. So I just wanted to double back to the meals and entertainment. Like I've had people ask me, ask us before, like, okay, so if it's only 50% deductible, like, does that mean I gotta pay with like two cards, or I should pay with my personal and then like reimburse myself like through the business? Like, no. Like just use, if you're taking out a client, meals and entertainment, yes, it's 50%, but like pay with your business credit card. Just know at the end of the year, when you hand over your financials to, to your accountant, like us at Ledgerly, what we're doing is we're making a tax adjustment, and we're going to add back 50% of that balance, that because we can't take all of it for your tax return when we're going to report it on your P&L. So just know that that's an adjustment. You don't have to go crazy like paying with like two different cards or anything like that, but that is an adjustment.
Andrew, that's an excellent point. Just the other day, I was, talking to a client that was looking at their QuickBooks account, and they're like, "Why doesn't this match my Schedule C?" so they were a Schedule C business owner. Um, so again, that's a perfect point. Your QuickBooks or your books, whatever books, are not always going to match what's on your tax return. They're going to be paper adjustments. There's going to be paper losses. Now, if you're an S corporation, you're going to have a box on your S corp return that actually shows your net income or loss per your books, and then a whole schedule to reconcile, like Andrew said, those tax adjustments, whether they're positive or negative against the business, favorable or unfavorable. That's an outstanding point. Um, Chris, I know you're on mute. Do you want to try unmuting it, and let's see if it works. If not, you can just sit and look pretty for the camera.
Can you hear me? Can you hear me? Can you hear me?
Yeah.
You can? Oh, okay. So it
Hey,
says it's
he's back.
muted, but I guess my screen's frozen.
That's okay. You
But
look
yeah, no,
great.
yeah. What was the question?
Right, write-offs.
If you want to layer on
Any,
anything, any personal
any,
Oh
experiences,
yeah.
any,
Keeping track of your write-offs is very important, and definitely knowing what area to categorize that write-off is also important. As we were discussing earlier, we had a client that meals and entertainment's 50% now, which, like Mike said, is back to the old days. But sometimes, if it's in favor of your employees in your office, it doesn't have to be meals and entertainment. It could go under an office expense, which is something that we can help you catch. You know, a lot of times our clients buy snacks for the office. If you're going out to dinner, that's kind of like more an entertainment thing, so that's meal and entertainment. But when you're buying snacks for an office, that would go in as an office expense, which is 100% write-off. So
right, or
there's
supplies.
benefits. Yeah, office supplies going to Staples. You know, that's why Staples has coffees and snacks and stuff there. So there are times you can actually recategorize items and actually get the full benefit of the write-off.
Yeah, excellent. That's an excellent point. I mean, if you're doing things for the convenience of your employees in the office, you know, coffee, yeah, I mean, a lot of people argue that coffee is a necessity. If people don't have coffee, then they're not going to be productive in their day. So for all you business owners out there that are going, you know, WB Mason or all these big box stores that provide snacks and things for your employees, that can save you some money right there on your taxes just from moving it from 50% to 100%. You know, every little dollar counts. So I think that was a great topic right there to start off. Anyone got, you know, anything else they want to kick in on the write-offs, or should we jump to the to our next topic?
No, I mean, hey, if we want to throw out a couple names out there, you mentioned WB Mason. WB Mason is actually a great office supplier. Everyone always raves about Amazon, and Amazon is great. But I worked my first job. I worked at a payroll company. They did credit card processing as well, and they were using WB Mason. And we would place an order at like 3 p.m. The next day, we get it at like 9 a.m. The order. It was way better than Amazon. It was, which is insane because Amazon's a titan. But WB Mason, Amazon's always good for ordering. Just throwing it out there. If anyone wants to use Amazon, totally do it. You can even, if you have a business account, you could put in POs and what expense category that item you're buying on Amazon is. We have a client that uses that because they buy tools and equipment. They also buy office supplies and, you know, stuff on Amazon. So that's wonderful. WB Mason's kind of old school, but they do next day delivery, like literally next day delivery, which I just wanted to throw that in there. That just popped in my head because that was an insane experience.
And they're a Boston-based company, baby. Go Sox.
Really? Hey, all right.
I think they are. I don't know. They're
well,
a big spot.
they are the proud sponsor of Stonehill College. I mean, the football stadium at Stonehill is WB Mason Stadium.
That's right. Go
Wow,
Hawks.
look at that.
There
And
we
All
this
right.
go.
and this guy who's CJ? Oh, Chris. Yeah, Chris is the one who the three of us didn't go to Stonehill, and here he is
I
banging the
know.
table for WB.
And no, and no,
Yeah.
listeners, we are not sponsored by WB Mason, and no, we do not do
Not
their books.
This is not an advertisement.
not yet.
Right.
Yeah, not yet. Not yet.
Good
Yeah.
stuff.
That's good.
All right,
But if you want to
awesome.
jump into the next topic, we totally can. We could go
Yeah,
over bank and credit card reconciliations and what that is and why it's important.
yeah, let's do it. I mean, CJ, I mean, you want to kick us off? I mean, I definitely have a a bunch of key touch points to talk about here on
Yeah,
the
of course.
it's the
Yeah,
importance of reconciling your bank accounts and your credit card
yeah.
accounts. CJ, you want to kick us off here?
Yeah, absolutely. So basically the lifestyle of our bank rec is it starts off with your bookkeeping and categorizing items. Now, when you have an expense, it connects to a specific bank account that expense, the bank account that incurred that expense. And how it works is basically there's a beginning balance and an ending balance. And then you have 15 to 500 transactions on a monthly basis. And you have to reconcile the bank statement ending balance with your QuickBooks ending balance. And basically what this is for is it's basically to help you, it's the last check for error internally in your accounting or fraud. Now, just to kind of open what that means, let's say you have a bank account linked in QuickBooks. You download the transactions and you have someone entering those transactions. The bookkeeper, boom, you have those, everything's accounted for. But let's say you also have someone in accounts payable who's paying bills and actively adding the check payments manually. But you as a bookkeeper are also manually entering those check payments, not linking it to that man. You're taking the bank transaction and not manually attaching it or linking it to the checks already written through QuickBooks. You're going to have an error. You're going to overcompensate your expenses and you're actually going to, on the books, have less profit. So what this does is it helps you go through and be like, oh, you find duplicate transactions, which a lot of times, depending on the size of the company, they can try to handle it internally. But when there's multiple people going in QuickBooks, it gets a little tricky after 100 transactions. The job shouldn't be that hard. QuickBooks, their software does a great job at trying to link amounts, but a lot of times, like $150 transactions occur multiple times in a month. So it's not always accurate. So you need to have some discretion there. It could be fraud. A lot of times people go through transactions, especially credit card transactions. And we had this, one of our clients had a bunch of random $750 transactions, $7 to $50 transactions from California. We were like, what
Remember
is this? We
this?
Google it. And it's a clothing company in California. We're like, hey, are these supposed to be here? And they're like, I have never seen that in my life. And a lot of times there's QuickBooks doesn't really have a flagging for what seems like fraudulent transactions, but a lot of times in our experience, it's the same transaction, but it occurs multiple times in a few days. Sometimes the credit card company will flag it and be like, hey, is this a fraudulent transaction? Depending on if it's an in-person credit card swipe or if it's an electronic, like online purchase. In these experiences, it was an online electronic purchase, so it didn't flag it. But yeah, so doing the bank rec basically, as you go in, you can see all the transactions that occur. You can see if there's any fraud that hit your credit card or bank account. And you can also make sure there's no double entry on the same transaction. So this way your profit and loss is as accurate as possible. By all means, if you don't do a bank reconciliation, you're leaving the opportunity for fraud or error to occur. And you don't have to, it can happen to anyone. So just, it's always good. It's the last line of defense for fraud and error. So 100%, it's the most important thing you can do as a
Yeah,
business owner.
definitely. I mean, Chris, I mean, you really hit the head on the nail on the head there. Um, I mean, from the fraud side, the potential for duplicate transactions if there's a manual entry and an automated entry in there. The other big thing too is that a bank recs, these reconciliation processes, they track four main things really. They track your cleared transactions, so your cleared deposits, so your money in, your cleared expenses, your money out. But then it also has your uncleared deposits and uncleared expenses, meaning that these things haven't cleared the bank yet. So they haven't been reconciled. They're basically just outstanding items. And what you should be doing, either monthly or quarterly, is keeping track of those uncleared transactions. For instance, I just did quarter 3 close for a client who had uncleared transactions from the beginning of 2022. And I'm like, well, okay, these are uncleared checks that the company cut, so it's cash out. And they added up, it wasn't a crazy amount, we added up to $10,000. And I was like, okay, well, these checks haven't cleared, but it's showing as cash reduction. So what are, can we write these off essentially? Can we void these? And it would add 10,000 back to your QuickBooks cash account. So those are things to keep in mind. Those unclear transactions, especially the big ones. And like Chris said, that could be like the duplication process. There could be your AP clerk could have entered a check in, but then your billing software could have also entered the check in as well, or the invoice in. So then you have it double counted. So the uncleared section of a bank rec is a vital. You got to keep your eyes on it. So keep your eyes on the uncleared section for sure. Andrew, when you were doing audits at Ernst and Young, I know cash was always it was always given to the first year staff, at least when I was on audits. But were there any big things that you came in when you were confirming cash, going through cash, auditing cash? Were there any big things that you came across from the reconciliation side?
That's an excellent question, and a little too far removed from being delved into the cash section to really recall. So would love to expand, but my memory's failing me here. But to layer on to our discussion, if I may.
Yeah, absolutely.
Yeah, just reconciliations they're very important, just like in the event, you bring up auditing. If you are ever subject to an audit, you want to have those records of, when you reconciled each monthly statement for, the past year. You don't want an auditor coming in and then asking you what something is and you have no idea where that falls into your financials. Reconciliation, that's something you could point to, like, oh yeah, I found that was right over here in, July or whatever it is.
Yep.
And then if you haven't been doing it for years, like we get cleanup engagements a lot, where we'll have to go back, months, sometimes years, and reconcile bank accounts on a monthly basis. And that's just something that's a very large fee, when you haven't been doing that for a long time. It's not an arduous process, but it's something that you could do and should do monthly. And then you don't need to spend, top dollar on someone to go back 3 years and reconcile bank accounts. So it's definitely important.
Excellent point. For sure. I mean, cash is what, boys? Cash is king. I believe that is the perfect, segue into our last topic here. First of all, bank recs, you got to do them. If you're not doing them, you got to contact Ledgerly. Let us do them for you, because not only is doing your bank recs going to paint a crystal clear picture for your business, but it's also going to give you more insight and insightful planning for your cash flow, which is our last topic here. So cash is king. Everyone knows it. Every company wants to have a healthy cash flow. But what does that mean? So a integral part of our operations here at Ledgerly is, we reconcile everything, we tie out your balance sheet, we run your profit and loss statements, we explain that to you. But having a healthy cash flow is, in my opinion, in our opinion, the most important part of running a business. Because here's a scenario. Let's say a company has, $500,000 of cash in the bank. That's awesome, right? That's great. They're freaking rich. Okay. But where did that 500,000 come from? Okay. Well, did that 500,000 come from collections on their accounts receivable, meaning their customers are paying them? Because that's great. That's very healthy. It's a very healthy turnover. Or did they take out a loan for 500,000? Okay. Well, then that's just debt. But debt leads to revenue generation. But did their revenue increase because of it? Those are all big questions.
Yeah.
Or
And Mike, here's another thing. I don't mean to interrupt, but
yeah.
what people don't realize is debt is also not taxable.
And we cover
right?
that in our short. Right. Debt is not taxable.
So people can really utilize that. And if they have a good product or if they have a good business model, they might be able to recoup some of that money before they have to pay it all back.
Exactly. Excellent point. And debt is not, it's not taxable. We go over this in one of our shorts. The asset that they are, hopefully they're hopefully they're purchasing an asset with that debt and not just taking the family on vacation or buying a yacht for their personal. Well, regardless, that wouldn't be on the books of the business. But yeah, the asset would be depreciable. They could write off the interest associated. But the last one too is, if you're a business owner, you're putting money into the company. Is that where the 500,000 came from? So the cash flow, just to bring it back to the basics, the cash flow is showing where your ins and outs are coming from and where they're going. So when we run a statement of cash flow for your company and we dive into the cash ins, the cash outs, that's the most important part of your business, because if you don't have cash, you can't run your business. You can't pay yourself, you can't pay your employees, you can't invest in assets. It's just the cyclical domino effect. That's why cash flow is so important. Yeah, I was very excited about that topic because cash is king, baby.
We'll get you a crown.
We need it. What else? You guys got anything on the cash flow side?
Now, just even, I know we're, talking to business owners here and just leveraging a lot of client stories, but I mean, that's even important just for your personal life. Like I tell my friends all the time, like, dude, like they complain about like not having enough money, or, rent's expensive where they live and all these things, or cost of living, yada, yada, yada. I'm like, all right, well, like, do you know, like, okay, so you work like a W-2 job, like how much do you get paid biweekly? How much do you physically get in? Like,
Okay.
all right, then go back and like create yourself a cash flow. Like, what are you spending this on? Like, how many times a week are you going out? How many times are you ordering Uber Eats or DoorDash, or how many times are you buying coffee? Like, run the numbers, like give
Yep.
yourself a little cash flow, like know where everything's going, and then make a plan from there. Like, I don't think you need to spend $10 on coffee every morning, or like buy a donut and a coffee and then not drink half of it. You like, like people, be smart with your money. It's important to know how you're generating it, and then, what vendors you're giving it out to, and what your, most important expenses are. Rent, car payment, those types of things.
Yep. You got to keep, you create a budget, you create a cash flow budget. And what a lot of people don't understand is that to arrive at your cash flow, for the purpose of bookkeeping and accounting, you start with your net income, and then you add back all the changes, the depreciation, your gain or loss on assets and whatnot, and you basically back in to your ending cash on the books. And that's what a lot of people do. They say, okay, well, this is my income during the year, but this is where this went, this one. It's almost like a reverse profit and loss, but it's not just showing your income and expenses, it's showing all the ins and outs of your cash and where you arose. But Andrew, that's an excellent point. We all need to create a personal budget, personal cash flow. I mean, if people really wanted, they can go out and download QuickBooks or download a Wave account and link their personal bank accounts and
That's
their
a good
personal
idea.
credit cards. And, it's not going to be a business,
Yeah.
but I guess your life really kind of is a business, but you can track it that way if you're really an accounting
Yeah.
nerd.
And if people, want to do it on a personal level, but not do QuickBooks, Intuit now owns Mint, which is a great,
Yeah.
it's great for categorizing at a very high scale, like, food, gas, all that stuff. It's really good. It helped me in the wife budget, I mean, sadly, at the end of the month, when you look at what you're spending your money on, it's like, oh my God, it's like insane. Uber Eats, it hits you after like 3 Uber Eats. You're like, what? Like $127? What? It's insane.
Orange
Yeah.
cigar.
Orange cigar, the write-off.
Tonight it is.
Yeah, baby. Yeah, it is. All right, boys. I think we covered some really good ground here. Any words of wisdom, any positive insights before we sign off for our listeners?
Just everyone remember the golden rule: cash is king.
Preach it. Say it again, louder for the people in the back.
Cash is king, baby.
Yeah, baby. Andrew, what do you got for us?
Absolutely nothing. Stay handsome, everyone.
Love it. All right, ladies, gents, boys, girls, business owners, thanks for tuning in. Any questions? Comment, like, subscribe, click the link, get in touch. Let's get a free consultation on the books for you. Bookkeeping, accounting, business consulting, you name it, we got it here for you at Ledgerly. We want to help you grow your books. Thanks for tuning in. Thanks for listening. Take care. And as Andrew said, stay handsome.